Equity is the key to scaling because you could refinance, you can extract that equity to continue to grow. Without equity, you're stuck. You've just put all your eggs in one basket.
So I was literally just thinking about, I'm like, how did I actually meet Zak? Like, there's so many different people and connections. And I was remembering, I came to Arizona, I didn't know a single person. Got plugged into a couple different communities, but also I wanted to obviously get into real estate. I think at the time I just bought my second house. The growth house concept just started, so I was brand new. I was really just painting the vision, didn't have anything. And so Albert, don't run away. Okay. So what do I do? And people ask me this all the time. How do I get started in real estate? Probably surround yourself with other people in real estate. And so what I did, I Googled it, real estate meetup. And then also I knew this guy from actually someone in this room, Sam Tashney, who you guys know. He said, you want to do a sign for Growth House? All right, cool. Meet my guy, Albert. At the time, Albert was doing these signs. So every single podcast you see with the amazing sign in the background that lights up, that's this guy. So give it up for Albert for that.
Albert.
And not only that, he hosted a meetup at El Jefe Tacos. And while he was there, I'm like, dude, who should I connect with in real estate? And he goes, there's this guy, Zak, he does hikes. I'm like, okay, cool. That's really all I do. And so he kind of pointed me in the direction. I'm like, all right, let me go talk to this Zak guy. Didn't know anything about you, Zak. And I went up to you, I'm like, dude, I heard you're the hike guy. You're like, oh, cool. Like, didn't know, you didn't say, no, I'm actually this, blah, blah, blah. He just said, yeah, man, I got a hike, you got to come. So the next, I think it was Saturday, you did the hike, I came. It was about 20 of us, and it's also really interesting because a lot of people here, I realized also met you through the hike, so we might have to run that back.
Yeah.
So we're on this hike, I get some time to, just talk to Zak, get to know him. He doesn't say anything about himself, he's just really curious, wants to know more about me. I tell him about this concept of Growth House. Like I said, very early stage, didn't have any of this that we have now. And he goes, dude, I love what you're doing, I see the vision, and I want to be a part of it, however I can help. And I'm like, okay, cool. We got this master class. I don't remember what it was, but it was a master class, and you just come. You just pop in. And you're just asking questions, giving value, and then I learned that you're the largest private real estate investor in all of Arizona. How many homes do you have right now?
283.
This dude has 283 homes, and I didn't even know that until like the third time I met him. And I just love that about this room because a lot of us that are here in this room and a lot of the mentors are the same exact way, where you can meet them and they'll never tell you their success. They just actually want to get to know you as a human being. And that's something that I love about Zak. That's how I met Zak. But also a couple of things I've learned from Zak over the last 2 years. And one of them was when I first got into real estate, I thought I had to be someone that I wasn't. I didn't know that I could be myself. And so I was trying to be all stiff and like, yeah, I'm doing real estate. I'm like, dude, you got 2 houses. You're barely in real estate. And then I watched this guy hop on calls and just joking with people. I think you're on the title agent or you're talking to title. And you're like, yeah, Susie, I got the lap dance coming for you. I'm like, wait, what? This guy is cracking jokes, just being completely himself and having fun. And that's something that you taught me, man. Like, you can be yourself and have fun, be authentic. And that's definitely something that I've really, strive to do now. And another thing is, this guy does not have to work a day in his life. Like, he's set, he's good. But he's out there, if you follow him on Instagram, he's doing Instagram lives. I'm about to, just go into this house and it's a complete disaster. And he just, like, this dude does it for the love of the game. And that's something also I've just really admire about you. And I just kind of want to share that background and that story. But with that being said, kind of introduce yourself a little bit more about like what you do, Trash to Cash, and we'll do a little Q&A. I'm going to ask some questions to kick us off, and then we'll open it up. And then after that, we have dinner. So it'll be a little sizzle and background noise, and don't get too excited. But that's kind of the game plan. So Zak, appreciate you being here, man.
First of all, I got to give this guy a hug. I just genuinely love this guy. When Jesse showed up on that hike, I know nothing about him, but I was genuinely curious. His energy, we're all here for a reason, because it's just contagious. He's just a likable guy. And with that, you just want to serve somebody like that. He was not like puffing. He wasn't anyone, again, just being humble and vulnerable. What do you got? Oh, I got it on. So you want to connect with people like that are genuine, that are humble, that are honest, that are transparent, that show up, just like all of you. I want to serve. Like I was talking to AJ before, how can you help? If you lead with value, I believe in karma and it reciprocates 100%. So have fun. We talked about it in the last room when you're giving pitches. Just be yourself. At the end of the day, honestly, nobody cares when you're public speaking. Someone you're thinking all these people are thinking about you. They're not. They're thinking about the booger in their nose or do they wear their shoes right. Like you got to let things go and just relax and be calm and breathe and just like I said, have fun. You got to put in the work, no question. So quick background, I moved out to Arizona in 2002. I didn't know anybody. I believe you got to show up and roll up your sleeves. Business is made in the field, not behind the desk. You got to get uncomfortable to get comfortable. We talked about that was a theme just briefly in that breakout session. If you're always comfort and you're always in a position of comfortability, you're not doing anything with your business. You're not growing mentally, physically, spiritually, etc. So when you get those feelings of discomfort, you're sweating, and you get anxiety, and when you get nervous or whatever it is, embrace that. That means you're doing something really good. Bob over here just drove 17 hours, trying to stay awake, getting out here. That's discomfort to get here, and I'm sure is well worth it. And I love this guy. Like, this is the reason I'm here, and all of you guys too, when I meet amazing people like that. I don't care if you're worth, negative money or you have billions of dollars. It's the energy that people are attracted to and that positivity, and that's, again, why I'm here. So real estate has been my means of wealth generation. I love the opportunity to cross-collateralize it and leverage it, and you could do so many different things with it. I believe nobody cares more about your financial future and can control it more than us. We are the captain of our domains, and I don't think there's any other field, we're all entrepreneurs, that's greater than leveraging real estate, right? If you look at the Forbes top wealthy people in the world in some capacity that have real estate in their portfolio. So I chose that as my domain and my niche to build in the single-family space. A lot of people have different businesses and different, opportunities that they focus on. I'm a visionary and I solely focus on single-family homes to be the best in class. Michael's an agent. I know he focuses on high-end stuff. That's probably what you're known for. He probably would never dabble in a home that I would flip in Maryville. He'd probably say, that's not worth my time. But I'm sure he may do it, but at the end of the day, he's highly focused on high-income stuff and, the Ferraris of real estate, and that's what he's known for, and he stays in his lane, just like I stay solely in single-family, and I'm not worried about what anyone else is doing, what anyone else is thinking. I'm just staying pure to myself to focus on what works for me at the, single-family, at the low-income level. So that's kind of what I've done. I built it one home at a time. I didn't come from millions of dollars. I raised private money from the beginning. We can talk about anything you want. I believe in consultation. So it's like, that's why I don't like presentations. I like the engagement. You guys are all here for a reason. You all have specific questions about capital raising, investments, collateralization, banks, branding. I love to get into all of that. So instead of just boring you with, oh, this guy's made a bunch of money, nobody really cares, you might be intrigued, but I really want to serve you and kind of open it up for questions and have a dialogue and converse and how, we can all grow and learn and enhance each other's lives, one question, one home at a time.
I got one to start off.
Yeah.
So Zach will answer a FaceTime call in the shower. And that's because this guy has a sense of urgency. And I want to start there. What's with the sense of urgency, and why do you think people don't do it, and why should they? So
I think that, coming from Detroit and the hustle, when I came out to Arizona, it was slow paced. I think that you always should operate with a sense of urgency. As time goes by, deals die. I think that, you respond quickly. If someone sends me a deal, they're going to be much more likely to resend future opportunities when I tell them yes, a quick yes, or a quick no. There's a sense of urgency. Same thing I expect when I'm working with anyone else. I call an agent. They don't answer the phone. I don't want to work with that agent. Be accessible, be responsive, and get after it. It's like, opportunities are here for a few. They could be gone in a minute, in 30 seconds. They're going to go to the next person. So I think dealing with a sense of urgency, people are just passive. And I bring that sense of hustle from Detroit to the Southwest. And it was like, why are people so slow here? There's no urgency. Someone lists a property, for example, on the MLS. I want to be the first guy out there. I'm calling the agent on the way. Hey, Mrs. Jones, is a home still available? I just listed it 3 seconds ago. What's going on? I just want to make sure I'm going to be sending you an offer. I'm going to look at it so I was there. I'll take a picture of myself in front of the house. You'll get my offer in 20 minutes. Sense of urgency. I'm letting her know. I'm communicating. I'm being proactive versus reactive. I find a lot of people are very reactive and not proactive. And I think that's a huge successful attribute to my, success in portfolio. So when he says that I answer the phone in the shower, I don't want to miss an opportunity, but, I make sure that it's from the belly up. I want to show the merchandise, of course, and offend anybody. Maybe it slipped a few times, but they've never called me back since. That's okay. So that's kind of the deal. For example, there's non-negotiables in my business. I refuse to do business with a non-transparent person or somebody that I find has poor energy, straight up, or somebody that gives me a price and I go out there and I say I'm good on the deal and they say, it's $2,000 more. I simply say, we can't do business. I'm going to give you 30 seconds to reconsider that, because that's bullshit, right? You got to be transparent. If you're offering X for the house, I commit, I drive out there, and you're not going to deliver on that, I'm never going to do business with you. It's a waste of my time. And that's happened a couple times, and I'll blast them on a podcast, so-and-so does this. That's just poor business. Be reputable, be transparent, be honest. You can always leave a few dollars on the table. I believe every transaction, and part of my standards, has to be a win-win-win. If I'm buying a deal, the wholesaler or the agent needs to get paid. The seller can't be taken advantage of. I need to make money. Title company's getting paid. Everybody's going to look each other in the eye and shake hands, and we can embrace after, all having a positive experience. If somebody in that group, which we call a zero-sum game, is going to lose, early on in my career, I felt like there's a winner and there's a loser. But as you gain success in life, you realize that everybody can win. And so that's how I look at every transaction, is how do we all come out favorable in this? And we can all go out, be friends, and celebrate that success together. And I care about not just that one deal, but I want future opportunities. So I don't look at anything as, this is an amazing deal and someone's going to get screwed, I'm going to get rich on a deal. Impossible. It's about the delayed gratification. It's about building those long-term, repeatable relationships. So,
have you always just been genuinely curious? Because that's something about you. You are not transactional. You're in it for the long game. It's something I posted recently. It's like, stop thinking short-minded. Like, focus, treat people right, play the long game. That's something I really learned from you. I don't really want to touch on that.
Yeah, I mean, I think that, you go back to being a kid and you watch little kids, they're always asking questions. Like I started out, I'd say a little bit. People are like, okay, that's great. When I ask people questions, or when you're raising private money, anybody knows, you don't want to just tell somebody the terms. You want to find out about them. What is your investment horizon? What type of interest rates are you in? What is your liquidity? What is a favorable return for you? Do you want equity or do you want a preferred return? Do you want a hybrid situation? Once you ask those questions and those people feel engaged, then you simply develop a strategy that's mutually beneficial based on that information. I find that when I was raising a lot of money and I went out and said, here's the terms, you in or you out, people are looking at me like, what an arrogant dick, like, what about my needs? Who am I to you? So I find that, God gave us 2 ears and 1 mouth for a reason. We should be listening twice as much as we're speaking, and you'll be much better doing that. But be genuinely curious. It's not about the deals for me. And I say, we joke around, call me Big Sexy, or I'm going to give you a lap dance to my title officer. Because how are you differentiating yourself in a pack of everybody going after the same thing? How are you becoming memorable? Or are you just redundant and mundane like everybody else out there? How are you differentiating your brand and being top of mind to the people you're engaging with? That's the question.
But can you customize terms for each investor in a fund? Can that work?
That would be difficult because you can't offer depending on what you're doing. It's more on one-off opportunities that I was doing. So It's a great question. On my fund originally, when I was raising $25 million for distressed assets, the terms are the terms.
That's okay.
But what I realized that didn't really work well because it's not favorable for 200 people to each receive one portion of a single family home that sells. And congrats, Hannah, you just made $300. You're not even excited about reinvesting. Versus now you want to invest $150,000, you're going to be on a first deed of trust. You were looking for a 6% return. I delivered you 8% on the first one. You're much likely to reinvest on that. I've customized that opportunity based on your timeline of liquidity, your interest rate desirability, your engagement in the project. Like, there's so many things outside of just the return that people want to feel they want to be a part of something. They want that domino effect of energy and excitement. They want to talk about it as if they're an equitable owner, or they even want to come out to those assets and see it. So it's not just the return, it's about them just feeling like they're a part of, just like this. We're all greater together than we are individually, right? We're all part of Investor Mastermind. We're not just one-off people. We're not prorations of this group. We are a massive energy and we're better together. And I think when you have that mindset in capital raising, I think we talked about it on, where's the Military to Millionaire? Where is it? There it is. I love what you said about, getting the people together on your fund in the resort, right? It's like that energy together and the connection in the military. They want to be part of that. So I think that's the energy and kind of the mindset you bring to that.
So how did you start on your first deal, and then after your success of your first few, how did you scale so successfully?
Great question. So the first deal was used OPM. My cousins were in the business in St. Louis, so they funded the operations out here. I was the human capital, right? I like to think we're all the jockeys on the horse. We had success on the one, and then we started, everyone thinks, you buy 20 at once. One house at a time, proof of concept, proof the model, and we did, and that first home was $60,000 on Rozier downtown. Very low risk. Let's proof the concept, then let's get the next one, let's see how we do, one and one and one. And then what I realized, I took my profitability from those deals. We had a 50-50 structure. I took my profits on that, rolled it into my own single family homes where I could buy them for cash. There wasn't a lot of debt offering back in, I started in 2002 to give perspective. So I'm doing this 22 years, just shaved, like to look a little younger. Thank you. So after that, the banks came out and said, Zach, are you interested in debt? I said, where have you been for 7 years? I'm all cash. But it sounds amazing, but the reality is homes back in the day when they were distressed, I'm buying homes for $30,000 and $40,000. So if I own 8 houses, I had $240,000 invested, and then the banks come in and said, we'll give you 70% leverage. From that, I cross-collateralized those deeds, unencumbered homes, to the local bank. It was Biltmore Bank at the time. I got a line of credit.
I worked with them.
Brian Cousins was my guy. Do you know Brian Cousins?
No, I left that bank. I had a terrible experience.
Got it. Okay. They were fine for me in the beginning. Yeah. I think my first line of credit was like 7%. But at the time, any debt was good debt, right? Went out and bought new assets from that line of credit. So I picked up 7 more. And the beauty of that is when you run the math, those new assets are unencumbered. So then all of a sudden I stabilize those again, I rent them out, do the same thing again. Now I add those new deeds to the portfolio, and you've seen appreciation, which, I was lucky. I'm not that smart, I got lucky. And the homes rise, and you continue to pull that equity to continue to scale and grow. In the interim, I was still always engaging those private money individuals, the OPM, to grow and flip houses while retaining my profits and putting it all back into the business to add more homes to the portfolio. So that's how I've done it.
So you bought and held your own.
I bought and held my own, and I flipped the other stuff with the other people because they want that immediate income. And then I also, I would aggregate 20 or 30 homes because I scaled pretty large. And when the hedge funds came in and were buying the Blackstones and whatnot, I would then sell off part of my portfolio at a premium because we had limited inventory. And then when I sold at a premium, I could reallocate those funds and do what's called dollar cost average into the market to buy those same assets at 50 cents on the dollar. You're like a kid in a candy store. It's like I'm selling 20 homes that call it $100,000 a pop at $2 million, and I could rebuy those assets at $1 million. I said, oh, you're a genius. Truly, I wish I would have kept them all, but it enabled me for liquidity. It also made me bankable. One thing is everyone brags about all these gurus. Oh, I pay no taxes. I pay a shitload in taxes. I'm not proud of it, but the reality is in order to be bankable, you come from a banking background. People look at your tax returns. Tax returns are important. You got to pay to play, and that goes with my mindset of delayed gratification. Everyone's addicted to the sugar and the Coke. That's how I was at 21 years old. Let's get, that quick gratification. But if you switch that mindset, let's eliminate the sugar, your body gets better. You eliminate the Coke, you're sleeping better. Except I'm not a Coke guy, some of you might be. But the point is, it's about playing the long game, right? If we have that mentality, it's like you don't go to the gym once and expect to be looking like Jesse's six-pack over here. This is not, drinking and no caffeine and playing the long game with your body, with your bank account. And that's kind of the whole mindset. So once I realized and I looked at a lot of the flips that I had sold, hindsight, of course, is 20/20, but we know real estate long-term is going to go. There's always going to be cycles, but I was never over-levered. I was strategic in what I was doing. I've always re-engaged my early partners, even for new activities. I'll put them in a deal here and there because I'm not greedy. A lot of people think, oh, I could just do this all on my own now. When the reality is when a new opportunity comes up and you've engaged somebody and they still want to be feeling part of the team, right? You want to call them up and they're like, oh, thanks for remembering me, right? I always remember where who set me up early on in the beginning, my family, my friends, other people, the OPM, and I give them credit, including my contractors and everyone else. It wasn't just me, it was their confidence in me, but it was also my confidence in delivering a good yield and a great return and experience, right? We should talk about experiences to those people because it's not just about the money. They want an experience.
Do you currently manage a fund with your assets or do you own them all yourself?
I own them all myself. I have leverage with a bank, small amount of leverage, and that's how I continue to grow and scale. So there's not a fund, it's just self-owned.
Okay, and do you hold leverage on all your assets?
No, I'm maybe 14% leverage on my portfolio.
Okay, and then what's your goal are you just stabilized and chilling, or do you want to continue to scale and acquire more?
So I get asked this question all the time. I just go to the moon. My dad's been in poor health. It's crazy. I didn't even think he'd be here today, humbly, in the last mastermind at the last experience. If anyone was there or you saw the videos, I was, waiting to fly back the next day thinking this is the end of the life for my dad. And I asked my dad, and I think he's on his deathbed, I said, Dad, I'm in a great spot. Appreciate everything you've done to me. Do you think I just take this thing to the moon, or do you think I should just sit back and chill? And my dad, who's a gambler, and he plays big money at the tables, and he's an animal, and he built his wealth by taking calculated risks. He goes, go big or go home. And I said, thank you. And then ever since, it's like, let's fucking go. Until it's not fun, right? I'm enjoying the experience. I love what I do. But it's like, there's no like, oh, I got to build this. I know you want to be a billionaire, and I respect that, and I'd love to be a billionaire too. I'm not there. But, one day if it hits that number, great. But it's not about the numbers for me anymore. It's really about just having fun, creating these win-win opportunities, showing up. I'm excited in the morning to chase these opportunities. If you're not doing something you're passionate about and you're like invigorated in the morning when you hop out of bed, you're doing the wrong thing.
Yeah.
So.
And what was your original why when you got started in, I guess?
In real estate?
Yeah.
I used to work on Wall Street. I grew up in an entrepreneurial family, and when I'm looking at all these different opportunities, I felt like this is the best vehicle to create a massive amount of wealth. I am a type A personality. I want to see it, feel it, control it. And I think in outside investments, that's very difficult. And we had people talk about restaurant businesses. You got food foliage. You got all these different variables that are outside of our control. Yes, there's certain things in real estate we can't control. We can't control interest rates. We can't control, inflation. We can't control, COVID and outside things. But there's a lot of things we can contingency plan, and we can do so many different exits with it strategically that I felt like this is the best vehicle to build a massive amount of wealth and maintain control and relationships and leveraging my skill sets. So it just happened to be serendipitous, and it was a good fit.
Did you have a traumatic childhood?
I was beat every day. No, I'm just kidding. Not at all. I was blessed. I grew up in a middle class, family, and my dad had a big law firm, and my mom was a teacher, and I watched my dad trade stocks every morning. I'd read the Wall Street Journal, and I was always enamored by equities and stocks and how do people make money. And just like most of us here, it's in the DNA. I was selling cookies on the corner and bagels and arbitraging in baseball cards and you name it. And then it's like I get to play real world Monopoly every day. I literally gave a presentation this morning to beginning investors, and I talked about who's played Monopoly. Everyone's like, yeah. I said, do you want to do that in real life with real money instead of just cards? Everyone's like, yeah. I said, that's what this is, right? You're just buying which property. You want to buy the boardwalk. You want to buy this. You want to get that. It's all about that passive income where we could be sitting here. My phone is dinging with Zells because today's the best day of the month with rental income passive. That's the goal. I could be working out in a gym or climbing a mountain or doing cold plunges with this guy and making money, so you're getting that reward and it's not requiring you to show up in the office.
Yeah. Last question. Are you a Gemini, an Aries, or a Sagittarius?
Don't answer.
I'm a Virgo. September 9th, 7th. Oh, 22nd. Okay. Got second.
I do want to ask, because we're talking about working out, cold plunges,
Yeah.
and I know it's really important to you. So talk to me about health and why it's so important to you.
Yeah, I think everything that we do is an energy exchange, right? We talk about things that you don't want to compromise in doing business with bad people. And, your word is your bond. Your reputation is everything. And so, you have a certain expectation from the counterparty we're engaging with. You want to bring your highest and best self. Like when you're giving that elevator pitch, the 30-second deal, you have a small time frame to impress somebody. And that energy is contagious. We talk about your energy enters the room before you do. It's like your reputation. So I always find in a business where there's all this stress and pressure is a privilege, I like to say. So anytime you're, again, feeling uncomfortable or overwhelmed, I just closed on a major transaction. I was losing a little sleep. It was a huge deal in multiple homes. And I was like, oh, fuck, I'm building a high-end home. I got this, I got that. I'm like, this is a privilege, right? Most people would love to have this. You got to remember yourself. So I think that you would give up every penny you have if you had poor health to get the good health. So I think the number one thing in our lives is our health, it's our family, it's love, all that stuff. My dogs, those are my top things. And the money all can come and go. We can create that every day. That's the beautiful thing. But it's that energy. So I set the tone every day by walking my dogs, going to the gym for a couple hours so that when that negative stuff comes in, Zach, my AC blew up, or a home caught on fire, which anyone watched my Instagram, I had a week like no one would even believe. Somebody got shot in one of my houses. I had a security guy on this portfolio that I bought, had to shoot a guy inside my property. People are like, this is insane, this is unbelievable. But if you can deflect that through that positivity and that energy that we're creating through working out, keeping a sane, stable mindset and head, you're good, right? We choose what we're going to allow to penetrate us and what we can deflect. And I think by having that good mindset, that good energy, that good vibe, That's what it does. And I multitask. So when I'm at the gym, people are like, get off the phone, you're annoying me, or this, or that. I'm like, oh, okay, fine, lady, do your thing, right? But I think that we all have a higher capacity than we believe. Somebody asked me before, do you manage all these houses? And I do. I'm vertically integrated because I don't trust a lot of people. So how do I do that? Again, I don't let that shit get to me, right? I just focus on the macro, not the micro. Stocks don't go up every single day. Warren Buffett, you could watch his stock. It's, Berkshire Hathaway. As long as you're playing that long game, it's going to go up and down. When I get the calls for the fires or for the ACs, that's just part of that volatility, but my chart's still going to do this, and you want to focus on those macros, that positive. You're investing favorably in that asset. You're not losing money. In fact, you've just enhanced that asset. So, sorry to bore you with the yawn.
So, Zach, I love your energy, man. Thanks for bringing this. But I think a lot of times when people see successful people like you, they kind of assume it just happened overnight or whatever. But I heard you say you've been at this for 22 years. 22 years. So can you talk a little bit about like the early days, and then I guess two-part question. When did you finally realize that this was your thing and you were going to excel and exceed and really, really make it and crush it? And then also along the way, you've been through a lot of recessions and a lot of downturns in housing. Can you talk about the worst parts of your business and the hardest things and how you overcame that adversity and thrived?
I love it. So go to your first question. What's the first one?
So when did you feel like you first made it? Like when did you know
when I
this was
first
gonna be
came
my
out here
thing?
and I knew this was right? I think I always just have self-confidence. Like I came out to Arizona and didn't know anybody. I'm like, I don't have an option. Like you're putting against the wall, you're gonna figure this shit out. I was doing a podcast yesterday with this guy and he says, I was down on my last 5,000. I have my 2 kids and dogs, $5,000, got to pay the bills, the electric, it's gonna go out. So sometimes when you're put in that corner, you perform under pressure. I came out here, I enrolled in real estate school. I was hyper-focused on getting my real estate license, building connections, and I knew when I got that first deal, because I was calling, I needed that proof of concept. But I knew that I was gonna be successful. Like I didn't have that self-doubt. I think you gotta have that confidence in yourself. I believe in everybody in this room. I'm no smarter than anybody here, I'll tell you that much. And I believe in every one of you guys can do whatever you want, and the sky's the limit, 100%. I just had that tenacity. I was blessed that I never put myself in a crazy overhead situation. My parents had a second home out here. I lived in their bedroom. I had no overhead. I didn't care about, again, some people are caught up in the material things. I don't care about fancy watches. Yeah, I live in a nice house, nice cars. I don't put any of that shit out there. That stuff's meaningless because I don't care what anyone thinks of me. I like to buy assets and not liabilities. And so leading into your question, during that recession, I started getting momentum and treating people right, building good relationships, having fun with people, building trust, and getting that team together. When the markets went down, I just literally, I rented out my house to a hockey player in DC Ranch. I sold the Mercedes. You hunker down. You do what you got to do to survive. You go into that survival mode and be patient. Because all things, they go up, they go down. And if you could ride out those cycles and not be over levered and not worry about, oh my God, I got to sell my Mercedes, nobody cares. Like they don't. I drive a Prius. People, I go on a date and some girl's like, Prius? I'm like, clearly you're not going to be my girl. I'm not going to show you my bank account, but that's fine. That's a good way to weed you out. I said, it ain't about the car. It's the driver, baby. But, but that's the thing is that at the end of the day, I promise you those are nice things, but it's your heart, it's your connection. And so hunkering down, not, again, nobody cares. Like they just don't. And even during that time when I rented out my house, I went back to my parents' house at like 28 years old. I was going on dates and taking them to a 55 plus community. They're like, what are you doing? I said, I'm staying in my parents' room. If you own that shit, it doesn't matter. Truthfully, if someone wants to judge you poorly for that, that's on them, not you. Do what you need to do. Don't worry about impressing anybody and staying the course. And I would still make sure I'm taking care of my tenants and renting stuff out. And I had ancillary, income and liquidity to service problems with my rentals to make sure that's number one. Tenants are always first. If I have an issue at my house, I'm taking care of my tenants first. This is something I like to say. Everyone use Yelp, for example, right? You look at how you're providing your service. Am I giving my tenants and the people that I'm engaging with a 5-star situation? Am I delivering a 5-star product? How's my responsiveness? What's my sense of urgency? Going back to your first question, how can you deliver? And if you're not, you should do a whole, introspection. Where am I failing in my business? Is it my energy? Is it my health? Is it my confidence? Is it, what's lacking to get myself and my business to that 5-star energy and 5-star review for what you're doing? And if I'm not worrying about myself and I'm taking care of everybody else first, then I can deliver that, you're going to be successful. It's inevitable.
Yeah. That's awesome. Well, I want to hand it up, but I want to compliment.
What was the last question?
You nailed it. You answered them all, yeah. But I want to compliment you on like you're continuing to grind today in this era of like Instagram fame and everything like that. I think you're a great example for all these folks here and everybody kind of coming up to show that, you know, not over levering and not, you know, outsourcing everything and grinding and bootstrapping, doing things yourself is the way kind of I came up too, right? I think it's
we have a lot of similarities.
Yeah, and we're Virgos. There we
Yeah,
go.
there you go.
But it's such a rare thing in today's day and age, and I think a lot of these like entrepreneurial celebrities that everyone looks up to don't do those things. And you've created a scenario where you've weathered multiple recessions, multiple downturns, and all these things because you did it the hard way. And you, all those examples you just gave, like everyone really listen to that, lean into that, think about that, watch this again. I mean, there's so few examples like you in today's entrepreneurial celebrity space. I just want to compliment you for doing what you're doing. It's pretty awesome to see.
Thank
man.
you. I want to add, like, it's funny because what people see, like these gurus, the people that are speaking on stage, I say it all the time. I like to use the expression, I'll show you mine if you show me yours. I'm not talking about my privacy, I'm talking about tax returns, right? Like, let's see your tax returns. Like, are you really doing the business, or are you just, is your income derived from education? Are you really in it? Are you staying current? How are you being top of mind in the space? You know, give me some testimonials from your tenants. You want to engage the people. We talked about testimonials before. What open-ended question for you guys when you give a testimony on the weekend? Like, be authentic. People don't want to hear Jesse say how great the weekend is. They want to hear from everybody here saying, what was your experience? Did it enhance your life? Did it enhance your business? That's authentic. And that's the same reason why you can get those referrals, and that's the cheapest way of continuing to grow the revenues from the tenants. I get a lot of leads from my tenants because you give that strive to give that 5-star review. But there's days, of course, I wake up and I feel like shit. You just got to get out of your shit and move forward and take care of those people. You know, of course. Bobby.
All right, so as you know, I'm kind of going through a situation with my first flip. And I know other people, they hit a wall or they hit an obstacle and they give up. So what was your biggest loss or the biggest challenge you had to overcome during especially your beginning phases?
I would say that going into, it's easy to operate in an appreciating market. You throw a dart at the wall, you can't miss. You think you're a genius. Oh, my houses are more beautiful. I made the best investment when the market's appreciating. It's very different when it goes down. And my biggest, just like you, and I think you mentioned you're in the middle of a $70,000 deficit in your bank account. But I think you turn that negative to a positive. My cousins that you guys remember, the OPM, I reinvested 7 figures with them on carry-back mortgages, and I was getting 10% on that money, so I was making passively $100,000 on it. Until these guys had $50 million net worths, got over-levered because they got too big and they didn't manage their finances. And all of a sudden, that mailbox money, that $8,000 a month, $8,500, stopped coming. And I said, holy shit, I just reinvested everything. That was a moment where I'm looking at myself and said, this is family. They stole from me. This is crazy. What are you going to do? That's the past. Now I'm going to leverage that into a positive. It's hard to do at the time, but I can say now with confidence, everything happens for a reason. One bad investment, one bad partnership. We talked about Emily's exit on her business, right? Every negative is a positive experience. You're not going to handle that again. So it's just going to make you stronger as a businessman. You're not going to make that same mistake again. You're going to put mitigating factors in place to make sure someone's not going to penetrate your account. I don't like partners in real estate. We talked about this, I think, with a couple of people last night, too. It's like you want to control your destiny 100%. You don't know what's going to happen. Marriage, divorce, theft. People go through weird shit in their lives. We want to be 100% in control. And I think by losing that 7 figures forced me to go back to the grind, do what I do best, being surrounded with good people, right? So you're not in this alone. I guarantee your best friend or your military buddies or your wife is going to say, Bob, get the fuck out of bed. You built your wealth before. You can do this again. I was blessed that I had a best friend. I'm thinking, maybe I exit. I just lost $1 million. I just worked, 4 years for this or whatever. And he says, dude, you're amazing at what you do. We need to surround ourselves with those great people in this room that encourage us to do what we do best. Fucking go out there and build it 10 times bigger and better because we learned from that mistake. And then when I engage those people from an OPM perspective, I tell them humbly, this was my worst thing. I did lend this money back to the cousins. I didn't have statute of frauds. There was no agreement because we were sending millions every day. And now, because you're going to invest with me, I want to protect your money so that would never happen under my control. So you turn that negative to a positive and make sure that you're vulnerable, you're honest, you're transparent, and you're going to put protectionary measures to ensure it's a win-win situation. So you're going to put some protectionary measures in your account in your future, and your contractor showing you the work, and before you send out a penny, So you're in a leverage position, not the other way around.
What's up, Zach?
What's up, AJ?
Good start so far, man.
Thank you, bro.
Really appreciate the insight, the energy. I have 2 questions for you. One is, right now in Arizona, what's the perfect deal terms for you?
Perfect deal terms in terms of acquisitions.
Yeah.
So I use what's called a 4-pillar model. And this is important to anyone who's looking at real estate. Number 1, does the asset give me an 8 to 10% return minimum? So I won't buy a deal. I spoke to your brother-in-law, right, who bought a deal that would not yield, I think his was 5 or 6. It doesn't make sense. Cash on cash. Yeah, great point. So unlevered cash on cash returns. And it's easy to run an unlevered cash on cash return, so we can add the debt later. But I never utilize leverage to get those returns. I want it to be cash on cash, so it's a stronger deal. So I go 8 to 10%, number 1. Number 2, there has to be equity. Equity is number 1. I will not buy a deal. I spoke to Kevin Show the other day. All of his stuff is, if he had to sell tomorrow, he's probably breaking even, unfortunately. Love the guy, but equity is so important. So if we're running a race, I want to be way ahead of the starting line, not way behind when we're starting out. So I need 8 to 10%. I need at least 15% equity after stabilization. So that doesn't mean I'm paying $85,000 for a $100,000 house. That means I'm paying $70,000, putting in 15, and now I have 15 to work with. Because we talk about scaling with Michael's question, how do you scale? Equity is the key to scaling because you could refinance, you can extract that equity to continue to grow. Without equity, you're stuck. You've just put all your eggs in one basket. That's number 2. Number 3, will this be a legacy property? Many people just think I'm going to buy this, I'm going to do an Airbnb, and that's your only strategy to create that. I'm basing it on a stabilized long-term tenant, not utilizing arbitrage or room share or any of that stuff, because I'm the Warren Buffett mentality. I just want one tenant. I don't want all this transient stuff from me. I'm just a long-term player. So is this a home that I want to own for the long term and give it to my grandkids or my kids or my dogs or whatever? Is this a legacy property? Do I feel comfortable driving out there? Is it an area I'm not going to get shot? Am I comfortable, etc.? Legacy property. If you don't want to own it long term, don't buy it. And lastly, can I buy this less than replacement cost? That's a cool thing. Nobody talks about that. So if you can build it cheaper than you're buying it, why are you buying it, right? That's a poor investment. So I say to myself, what is the cost of the land? If I got a builder to build it, what does that figure look like? And am I already ahead of the curve based on that? Because with inflationary measures, that's a good tool to leverage. So 4 factors, 8 to 10%, 15% equity, legacy, and less than replacement cost. If it does that, bottom line is it's a green light.
That's great. Thank you. Great response. Second question is, it seems like, clearly you're managing a ton. And so I'm curious, what's the size of your team and what tools do you use daily that help manage all this?
So funny. I think a lot of people get so wrapped up, and I'm an old school guy, right? I'm out to my projects every Friday. If someone logs onto my Instagram, I say, I'm out of this project, and here's this. I use my phone, okay? I swear to God, I use my phone to, manage and call my guys. We use QuickBooks for the back end of our software, not all these management softwares, which I know there's good stuff, which I need to explore, but I'm an old school guy. I write the checks to my guys, and everything is allocated to each home. When the guys go to Home Depot and all materials are all allocated to a per home, and all the insurance and taxes and all that stuff, it just breaks down through QuickBooks with my assistant. So I have a full-time assistant, I have a full-time bookkeeper, I have a full-time handyman, and I run 6 crews full-time to do the construction. We are lean as can be. I don't have an office. I work out of my house. What's that?
No PM, no project manager?
We're vertically integrated. We manage it all.
So when you're calculating your 8 to 10% return, you're not putting in any numbers for property management at all, or are you?
Well, it's right here. You could put a cost for the opportunity cost of your time effectively, but no, it's not in there. If I did that, it'd be really hard to achieve those deals because a property manager is going to take, 6%, 7% of your gross rent. You can negotiate it down with volume, but for me, it would kill probably a lot of deals. So I think, again, operating lean enables me to buy deals that may be questionable for other people.
And are you calculating that based off of the stabilized rents or current rent value? Are you 8 to 10% off current rent and current purchase price, or 8 to 10% return on after repair value?
After repair value, because of course I'm going to have that additional funds in there. Otherwise, I'm cheating myself. I'm talking about my return has to be all in. So if I buy a house for $300,000 and needs $50 in construction, I'm going to take it on the $350, not the $300. Otherwise, my yield's going to be much lower. Yeah.
Jordan?
Yeah, quick question, Zach. Appreciate the energy.
Yeah.
Based on what you know now, if you could do it all over again today, you know the market. I've called you on a couple of your listings before. How would you do it in this market today? You're buying houses at $20,000, $40,000 today. That same house is $360,000 to $400,000. What would be your play today if you could redo it all over?
Yeah. So I'm continuing to buy. I wish we could go back in time, to the 20 and 40, 25,000, but unfortunately I can't change that. I can only control what I can control. What I would do today if I'm coming in and, it depends on your capital situation, keep doing based on my terms. As long as they hit those parameters, I'm good. Or I would find strategic partners. I'm betting on myself. I want to be the jockey, and I want the people in the crowd to bet on me, and I want to give you a show, and I want to make it a favorable experience. We talk about insuring. A lot of people, when you're, raising capital for big acquisitions, you're getting a management fee, you're getting an upfront fee, you're doing all this stuff. I've never taken a fee or a commission or anything up front because I always want to ensure that my investors are always taken care of to the highest level, full transparency. So until they get paid, I'm not getting 1 cent, nothing. So I'm fully incentivized to perform and cross that finish line. So I think you can make any investment work today with the right capital partners and ensuring you're finding the right strategic partners to play that long game with you, not the people that are just looking for that quick sugar or the irrational returns. Oh, I want 20% or 25. Those deals, if someone's looking for a 20 or a 15 or a 12, that's such a high risk deal, right? I'm a value guy. I'm happy to deliver 8, 9% deals, That's what I'm confident I can achieve, and I've done it time and time again. And I think that's really important. A lot of people with their confidence, and we saw AJ says, I'm going to dilute. I love that yesterday in your presentation. And Military to Millionaire says, I love that about your presentation. It's so with conviction. I will rather sleep in my van than lose money for anybody. You've never lost money for anyone. I've never lost money for anybody in my life, and I would rather fucking sleep on the streets in Van Buren than not give back somebody's full principal. When you look somebody in the eye as a fundraiser, is the jockey, and you tell them that, they're going to invest in you. Forget about the presentation, forget anything else. You have that mentality, you have that conviction, you have that optimism and execution. That's how I would do it. I'm looking for the right players. I will go to war with you, no pun intended, to ensure you're getting your money, and we're going to make this successful. That's confidence, but you're also executing, driving it. So you can make money in any market. The down market was actually the best time to buy because when people are fearful, you got to be greedy. When people are greedy, be fearful. It's the same mentality.
Zach, the urgency is refreshing, right? Especially in this day and age. My question is more around what are you most proud of, right? In your tenure of everything that you've done, from family to professional to all the friendships. Like what is the cornerstone of what you're most proud of?
Probably my dad's resilience for still being here. Like, he's a fighter. Family's everything to me, man. Like, I'm proud of the people that I've impacted locally, and I've mentored people across the nation that have made 7 figures, and I had a coaching program for a year. I was really proud. I was the same coaching program as Pace Morby and Jameel Dams, all these guys, and they can run analytics in terms of pound for pound, how successful is your community? Did people understand what you're doing and take action? And I think, when they made a video at the end, I was crying on the live, Zoom when everyone says, Zach, I did this and I did that. It was just, I'm a sensitive fucking guy. Like, I really am. I'm transparent. I tell you how I feel. I'm real. And that's the thing is I love that, to help other people and see them win. My dad's resilience, to have a wonderful twin sister and a great family that's always been supportive. That's probably my greatest,
I think it's really good to kind of go back because you had a story that you shared at the last immersion where you were at the dinner, I believe, with your siblings, and they're just like, Zach, you're an asshole. Like, you're on here on calls, and I want to talk about that transition to you realizing who you were, accepting it, and then changing.
Okay, great. Yeah, I remember. So I was back in the day, sense of urgency. I had 2 phones. One wasn't enough. I was doing TV advertising and billboards, and I'm taking the calls too. It was just crazy. And I had 9224 and 9225 because they both spelled Zach. It was 405 Zach. And if you didn't know how to spell Zach, I'm like, I better get the 9224. So I had both numbers. Like, this is Zach. I'm interested in buying your house. This is Zach. I'm at dinner with my sister and my brother-in-law. And I'm taking the calls. I look up and I'm wondering, where did they go? They must have went to the bathroom. 10 minutes, 20 minutes. Maybe they got diarrhea. I don't know what happened to them. So they don't show up, and all of a sudden, like, are you guys okay? Is there a family emergency? I said, no. You're such an asshole. We're trying to have dinner with you. All you're doing is buying deals, right? Like, humbly, I'm like, they're so right. Like, this is ridiculous. Like, you can't be taking calls. There's a time and a place, and yes, there's a sense of urgency. But I think that, and I do a lot of FaceTimes. Anyone that knows me, typically, if you call me, it's a FaceTime call. I want to exchange that energy. I want to be present. you got to be present with your family, the people. If that deal's gone, like I say, one opportunity goes, two more will come, especially when you're with family. So stay present. Don't be a dick. There will always be another opportunity, especially if you deliver, that 5-star service and your Yelp reviews and all that stuff. So it's just karma, right? Like you ask for it. The deal, there's always deals. There's abundance of opportunities. And people say, why do you teach what you do? Or you give it all this free information? I'm not scared of someone there's a limited amount of single-family homes in distress. There's an abundance for everybody here to have thousands of homes. God bless America. So when you have that mentality, everybody, again, can win. Early on in my career, again, I felt it was a zero-sum game. I got to win. I hope everyone loses. I hope they get in a car accident. That was so fucked up. That was so, selfish and crazy. But honestly, I don't know if any of you guys have felt that way, but that's how I thought business was early on. It was cutthroat and the Wall Street mentality. You sell a stock, somebody loses on a put option, and I win millions of dollars. It doesn't work like that. It can. But when you change your mindset and, that energy exchange, and good things happen to good people, from charities to just always doing above and beyond outside of the cameras and all that stuff. Just always be yourself. It's funny when you meet people on the Instagram or you perceive somebody one way and then you meet them and you're like, oh, they're really quiet. That's weird to me, right? Like, just be yourself through and through. You don't have to think about what you're doing. Or when you're giving your pitch, you guys are passionate about your businesses. You're passionate about being here. Talk about it. You don't need to look at your phone and say, oh, this is what I do. You know what you do. Say what you do. Be excited about it. If you're not excited about it and you're low energy, you have a low likelihood of somebody investing in what you're doing.
Yo, what up, Zach? Never
What's
met
up?
you before, but you're bringing tons of energy. I appreciate you.
Thank
I'm
you.
really glad that I got to witness this. What do you say, like, coming from a Wall Street background where you, like, look at different asset classes, what do you say to somebody who built their own business in professional services, exit, now wants to run a family office, doesn't really know where to start with real estate? Do you believe in kind of a concentrated asset class the way you've done it, where it's like you're operating these properties? What about for somebody who doesn't really want to get their hands dirty? What do you think?
I think that's a great question. I think you find somebody in this room, for example, that's looking for capital. Someone's got a proven track record and probably diversified, depending on how much capital is on the exit and what's exciting. It depends on what type of yield you're looking for. Obviously, family offices are probably, $50, $100 million investments, or what type of capital are you looking to deploy, or hypothetically?
We'll see how good the exit is, but I'm just trying to, get my ducks in a row and thinking through, real estate's an asset class I'm not very familiar with.
Sure.
And so it seems like your strategy is more about long-term consistent returns than looking for double-digit returns.
Sure.
But just how do you think about getting into real estate from somebody who doesn't know the space at all?
That's a really good question. Again, I would probably, and I'm happy to take you around, or depends what excites you. Find out, like, do you like the single family? Do you like the multifamily? Are you looking at funds? Are you looking at something passive? Do you want to be active in it? If it's going to be fully passive, find a workhorse. Here's a fund right there. Hannah's got a fund. Michael probably knows a million people. We all know somebody in this room that can deliver, and find out what really whets your appetite. Start exploring. Spend a half a day with those people to really look at the micro aspects of that business and say, do you want to be active in there? What is the mechanisms to protect that money for you as an investor? Are you going to be on a first deed of trust? Are you going to be subordinated on debt? Are you, what's the entity you're investing in? Is your money going to be commingled with other people? Do you want to have full control? So really, I would get with a top manager, somebody that's deployed money that way, and start aggregating. You're an attorney, top dog attorney, right? I've seen your stuff, all 50 states. Love your shit. See, I do my research. So I would start doing the same research to make sure that you're protected, right?
Do you diversify into other asset classes, or are you 100% net worth in real estate?
Great question. I am diversified, but not very diversified. I'm in the cannabis space just because my brother-in-law started a private cannabis company and took it public, so I had to invest in my brother-in-law. And then I have some equities because early on I invested in a lot of my 401k stuff to maximize that out. I wouldn't do that again because, again, I think all that Wall Street is a bunch of bullshit. I'd rather bet on myself long-term 1,000,000 times over than having my stockbroker call me once a year and has no idea what's going on in my life and really doesn't care about me. So I like to control the controllable. So I'm happy to be, if I do it all over again, I'd still just be in real estate 100%. But for you, it's not about really the returns. If you have a sizable exit, I would probably start saying, if someone's offering you 12 or 15%, you could jeopardize everything that you built up. I'd probably look at something more comfortable in a 6 to maybe an 8%, where it's just slow and steady. You worked so hard to get to that exit. You're in asset preservation. You don't need to, stomach that risk moving forward because you've already done so well. So I would keep some liquidity. I have some real estate. I've diversified into different things, but again, I would explore the different aspects and protectionary measures to mitigate risk for you moving forward.
Cool. Appreciate you.
Yeah. There's nothing wrong with commercial. I'm not a commercial expert. I have plenty of friends that have done extremely well. I have a lot of friends that did extremely well and they've got hammered, right, with the market. And, a lot of that commercial debt is more short term. You don't see a lot of long-term 30-year stuff. So when the rates crept up, all these people, they're just hemorrhaging money right now. They're in a lot of workout programs. You can make money in anything that you do, right? I stick to my lane. I've done a multifamily. I've done a 62-unit complex that I bought, and it was just a disaster. It's outside of my comfort zone. I'm glad that I did it. But again, single family is my domain, and that's what works for me. It's always worked, and there's no reason to pivot for me. Everyone always says, you could just own thousands of doors in multifamily. Well, that's great, but single family works just fine for me.
Take 2 more questions. You got the last 2 questions.
Yeah.
If you could tell yourself 22 years ago one thing on how to be successful, what would you tell yourself?
Stay the course. Just like, again, I don't regret anything I've done. Again, remember that it's the long game. That I think early on I was so worried about stacking that quick sugar and cocaine mentality. Again, delayed gratification. I'm happy to plant the seeds, water every day. And if you're playing that long game and you're doing that 5-star, execution, you're going to be phenomenal. Just play the long game. Surround yourself with great people that you can trust. It's going to encourage you to continue hiking up that mountain when it's hot, when it's raining, whatever, so that you're going to get there together and just continue to stay the course. Be patient.